Hello and welcome to the Pilot Money Podcast. My name is Alex Tapia, President and Founder of Aviation Retirement Strategies and ARS Private Wealth. Together, we give you the tools and advice you need to take advantage of the ever-changing financial world and help you take care of the business end of your professional aviation career. As financial fiduciaries, we bring you up-to-date, relevant, and independent information so that you can make sound financial decisions for yourself, your family, and your eventual retirement from the airlines. Don't forget to hit the subscribe button so that you can stay up to date on any timely information that we bring to the professional aviation community. Or you can also visit us online at www.pilotmoney.com. Once again, welcome to the Pilot Money Podcast. Hello, everybody. Good morning, good afternoon, or good evening, wherever you are in the world today. My name is Alex Tapia. Thank you for joining me here at the Pilot Money Podcast. Today is March 4th, 2025, and we are doing this video because you might have seen some changes come through in your portfolios, some trade confirmations via text or however you get them, about some changes that we're making in your portfolio based on some of the research and some of the things that we are seeing based on what happened last year and what we're expecting for this year, and trying to adapt to the current environment that we're in, which is significantly different from last year's. Now, our research, along with our investment committee, recently updated our capital market assumptions and also a strategic asset allocation as of late February of 2025. Basically, what we are doing, we are reducing risk in model portfolios with strategic time horizons, as well as the risk-reward trade-off for stocks and bonds is increasingly challenged in today's slow growth, elevated inflation, and higher for longer interest rate environment, particularly in the equity multiples that expanded in 2024. Basically, we have reduced the exposure to domestic mid-cap growth equity so that we can incorporate real assets to hedge potential inflation risk via a diversified basket of commodities, global infrastructure, domestic value equities, and shortened duration while broadening our credit profiles in our fixed income. The result, it adds exposure to the sectors that tend to do well in an inflationary environment. Also, we have replaced our investment-grade intermediate corporate bond positions with shorter duration, higher yielding positions, or basically higher interest rate with less price fluctuation, while further diversifying our fixed income profiles. Also, we're evaluating a modest rotation from developed international equities to emerging markets as the risk-reward profile is increasingly favorable, as I said before, basically cheaper and potentially higher upside returns going forward. Now, what that means in English is basically last year we had a fantastic year, and we're going to be able to take some profits off some of the U.S. equities that really made all of the money last year. Because last year, if you wanted to make any money in the stock market, you pretty much had to be in the U.S. Well, everything is cyclical, and so now what we're going to do is we're going to try to take some profit off the top and kind of adjust for more of a longer than expected inflationary environment, and also start getting into some of the sectors around the world that didn't do as well, that are poised to basically outperform the U.S. markets the way we're seeing it. As we go through all of the portfolios, making these changes and how they are applicable to each and every portfolio that we have, and as you know, most of our portfolios are customized, so it takes a little bit of time to get all of this done. But as we're making these trades, you might be seeing some trade confirmations coming through if you haven't seen them already. But it's going to take us a couple of days to get all of this done. So if you have any questions about your specific portfolios once you see these trades come through, please give us a call and let us know. We'll be happy to discuss with them. Like as always, anytime that you have any question about anything that we're doing with your money and how the movements that we're making, why specifically we're making them to your specific allocation and your risk tolerance. But for now, thank you for listening. I hope that kind of cleared a couple of things up. I know it was a little bit technical, but feel free to call if you want any clarification on anything. Thanks again. We appreciate your trust, and we'll talk to you soon.